Hello everybody, happy Tuesday. It's me again, and this is a big one with an unusual title, and I wanted to write it all out, but there's too many words, so my creative person shortened it. But we're going to talk about a lot of Bitcoin stuff, a lot of on-chain stuff, but we're going to talk about developers, debt, default, and debasement, because still people don't get how bad things are. I'm also going to show a lot of exponential charts. So many, you'll be tired of looking at them. So let's jump in. First of all, this is edutainment, not financial advice. And second of all, we had a lot of requests for a long time to summarize everything because I go very fast. We're going to cover 50 nuggets of information in about 28 minutes. And many people need a recap. So we have a writer on staff now that puts a summary of every video together. It's about 300 newsletters a year. And we have now added podcasts for those who like to garden or run and listen to these things. You'll be getting about 6,000 units of alpha, as I call nuggets, a year for $45. We have a special offer going right now, and that is about 15 cents per newsletter or 0.008 cents per nugget of information. So check out the Substack link somewhere below if you want. And again, nothing goes to me. It's for the writer. Let's talk about the good news first. Quite a bit of good news, but also a lot of ugly news. But the good news beat it out ever so slightly. First of all, let's talk about what happened the last week. As you can see, Bitcoin did okay. Kind of flattish, but ETH came back. Sol, XRP, Cardano, Doge, dark green, and we all know why. Obviously, Elon's back to his playful self again, taking the Twitter bluebird, which he never liked anyway, replaced it with I think it's a dog, a Shiba Inu or something. Anyway, this is crypto over the last 7 days based in dollars. The first one was based in Bitcoin. Obviously, Bitcoin's flat against Bitcoin. Bitcoin's up, though, 3.73% for the week. In fact, altcoins are rumbling a bit as we talk right now. Let me see. Yeah, it's gone up $100 since, but the alts are actually running a bit faster. Ethereum up 10%, which is a big move. It's only a matter of time before the alts follow Bitcoin. And we'll talk about that in a minute, too. But the rest is all dark green with the exception of Binance. Obviously, Binance still has a couple of headaches. We'll talk about that too and explain all the reasoning behind everything. Stock market now. This is a bombastic week. And this is a lot of people frustrated. A lot of people, and I always go back to the same thesis. People say, well, the macro's bad and there's a war and everything else. But remember, the stock market's valued in dollars. Dollars are going down. Therefore, the stock market has to go up. Yes, there'll be undulations, but over time it goes up. So this is stock market of the last 7 days. Pretty much everything's green with the exception of financials. Even pharma stuff is green. So that's where we are. Some stocks had great weeks. Amazon coming back from the death. It was slumbering for quite some time. And a lot of other good stuff as well. Everything kind of just onwards and upwards. Nvidia, Tesla got hammered, of course, because they beat earnings. And nobody still understands what that company is. But we don't care. A lot of things. We'll talk about another name as well that nobody understands. And but again, on this channel, we try to get into positions that will do very well over time. Remember, over time, the market is a weighing machine. Short term, it's completely irrational. All right, let's talk about what's going on in the world. Let's start with Bitcoin accumulation. Obviously, red is dumpage. Orange is kind of not doing anything, not accumulating, not distributing. And blue is heavy accumulation. You can see here all the cohorts. In fact, the dark blue are the less than 1 Bitcoin, the 100 to 1,000 Bitcoin, and 1,000 to 10,000 Bitcoin. But the 10,000 plus were dumping, and we know who that was too. So that is the government. They sold about 10,000 Bitcoin, and pretty much close to the same time, Sailor was accumulating, but I think it was before with that March period. I covered this last week's video as well, breaking out the development over time since early 2021 of all these cohorts. So it was nice for Glassnode to put this together today. Very helpful to keep us track of what's going on. But overall, market's looking pretty good. Everybody wants that safety net. Now, in addition, this is a historic Q1 for Bitcoin. And you know, as people say, I'll zoom back out for a second. The four most dangerous words in investing is this time is different. But per Bloomberg, this time is different. So if you go back here and look at Q1 2023, I knew it'd be good, but I didn't expect a 70.3% return on Bitcoin in the first quarter. That was monstrous. Now, 2021 Q1 was also monstrous, but that was triggered by Tesla buying $1.5 billion of Bitcoin, which lit the market on fire in January 2021. And since then, it just went crazy after that. So, but if you look at all the other historical Q1s, and a big thank you to Jamie Coates at Bloomberg for this, and going back over the last 9 years, Q1 is crap normally. Now, 2021 was right at the halving. So actually after the halving, a year after the halving, 9 months after the halving exactly, because the halving was March or May. I can't remember. Oh my God, so long ago. But here you can see 2023 is an anomaly, but also all the other Q1s are very, very red, and the average return is 17%. But I think 2017, green, 2019, green, but the rest, not good. So what does this mean? What's going on? Well, there are things changing in the marketplace, and that will include correlations, which I'll talk about in a second too. So first of all, let's talk about some more on-chain stuff. This is the MVRV deviation bands to kind of let us know a feel of where we are in the market. And we actually use this, one of our 20 things we use in our top and bottom indicator for Bitcoin. But this is a nice little chart from the Glassnode team. Big thank you to Sanjay for sharing. And this chart presents the set of deviation bands related to the MVRV ratio. And if you take the bottom one, if you're below the green one at the bottom, the MVRV below 0.9, that's typically a very low band, very kind of beyond depression despondent. When things are this low, you should typically buy as much as you can, not financial advice. And then you got the mid-range, and that is between the 0.9 and the 1.8. And we are right halfway between that right now at MVRV 1.4. So we have a long way to go. And if you get to above the 1.8 range, that's the excitement range, up to the 2.7 range. And above the 2.7 range, it's seatbelts on, things go bonkers, and it's a very dangerous time to buy in the market. But here it shows we have a long way to go. We've come way out of the depression phase. In fact, it was a great time for many people to do a lot of stacking. And here we are coming out. So clearly, per this and per me, we are well into the new bull run. Bear market is over. But anything can change. And you do see double dips. In fact, you had that double dip back in March 2020 caused by a black swan. So that could also happen. We have to wait and see. A lot of people are hoping it will. Let's talk about Balaji's bet. Well, it's floundering. It kind of, she shot up with all the excitement. Not really because of him, but because of his passion about debasement. That's one of the topics today as well. Debt and debasement. Where is fiat going? But you can see he's not going to win his bet. We knew he wouldn't anyway, but it takes time for things to hyperinflate. That's where we are. A great chart by Econometrics. Now, let's talk about GBTC for 1 second. This discount has been so steady over the last 3 weeks, ranging between kind of 35 and 37% discount. And that's a very good sign, positive sign. So we'll see what happens with their court case. But it looks like people aren't too worried. And it wouldn't surprise me if next week we get to 35%. Let's talk about Bitcoin season. Now this one, again, another floundering, bouncing across the bottom activity. They can only stay down here for so long. And we are now at 27. Last week we were at 25. And this means we're still basically Bitcoin season, but we're coming out. And especially if you look at the market today and over the last few days, the alts are really outperforming Bitcoin over the last week too. Now, 2 weeks ago, I did say Bitcoin dominance top was confirmed. I got a bit nervous there because it was bouncing across the top for quite some time. Let's zoom in and look at where it did bounce. Right there, that first little peak, I believed it was the Bitcoin top. And then it dipped. And I said, wow, that was good. Nailed that. But it has been kind of petering back up for weeks and weeks now, but it clearly can't get above this 47 level. So for those thinking Bitcoin dominance is going to go to 70%, nope, not going to happen. Very unlikely. Let's talk about the Bitcoin stock-to-flow deflection. This is the ratio between the current Bitcoin price and the stock-to-flow model. And if deflection is greater than 1, it means Bitcoin is overvalued based on the stock-to-flow model. Otherwise, it's undervalued. And guess where we are now? Well, we are at a 9-month high. But don't get too excited. We're nowhere near having it above 1. We are at 0.254. And last time was this at this level, it was June 2022. And we all know what happened after June 2022. That's when the wheels came off. And between then and November, it was a pretty dark time. But anyway, that's all behind us now, it appears. Again, barring any black swans. Let's talk about decoupling news. I like to always look at the correlation between the Nasdaq and Bitcoin. And you can see Nasdaq has come back a little bit. Nasdaq is now up 18% over the last 90 days. While Bitcoin is up 67%. So hanging in there, doing very well, but still far outperforming. But this one is very interesting. This is a super one to think about. Correlation. Now, normally, I've mentioned many times that the next 10 years will be the decade of the hard asset. Hardness is everything. Well, gold has been on a bit of a rampage. It's up about $2,030 now an ounce. And you can see here, gold and Bitcoin are now correlated, and the correlation is broken with the S&P 500. At last, hallelujah, that's great. But this is also great not only for the thesis behind Bitcoin, because in desperate times, people move to gold. And for gold to be correlated with Bitcoin means it's a safe place to be. So let's talk about where we are with alts before we jump into altcoins. This is the top 50 alts versus Bitcoin over the last 90 days. You can see Bitcoin's in the black. You can't really see it, but I put a big green arrow in the middle. It's between Filecoin and Solana. Bang, right there. And you still see the modern stuff, what I call a separation, the new layer ones, etc., doing very well so far compared to Bitcoin, beating Bitcoin over the last 90 days. And that's saying something because Bitcoin has been on a rampage. And then the old stuff on the right is still not moving. And Leo is red and Ape is red and all the other garbage. I'll talk more about Ape as well later. And the importance of looking at how things are structured. Now, let's look at some money flows. This time, we're not looking at major flows, but the detail. So, Ethereum is down about 3 million. Bitcoin up about 9 million. Not bad. Then you have a couple of other things, a little sell-off in Binance. But what's also interesting is behind the scenes, behind all these numbers, Germany saw about $22 million of inflows. And by the way, this is from our friends at CoinShares. US, Canada, and Switzerland sold off about 12 million. So Germany alone had inflows more than the combined outflows of US, Canada, Switzerland, which is kind of stunning. I haven't seen that happen before in quite some time. And the sentiment for Bitcoin has been kind of supportive, which is good. But there's a couple of things that did happen. There were additional flows into names like Solana, XRP, Polygon, and a mixed bag. And there was some outflows out of Binance and Polkadot of about 340,000 and 290,000. I think looking at these little notes here. So all in all, positive but mixed. Let's talk about stablecoins for a second, because a lot of people believe the move of Bitcoin was fueled by people moving out of stablecoins, just like people aren't trusting the banks. They're moving their cash out of this, and stablecoins typically are a safe harbor for investment because it's pegged to fiat, and we love fiat here in this channel. But when investors are more risk averse from cryptos, they convert cryptos into stablecoins. And the opposite is also true. When they are worried about everything else, they go to the safe haven asset, which is Bitcoin. So this chart here shows you the relationship between stablecoins and Bitcoin exchange balances. And as the number increases, investment withdraws from Bitcoin and vice versa. But we're seeing the actual drainage of the stablecoins over Bitcoin on exchanges, and the Bitcoin price is going up. It's not all explained, though, by the move out of stablecoins into Bitcoin, but a big part of it is. So it takes a lot of money as well to move the big 800-pound gorilla Bitcoin. Let's look at some detailed stablecoins here again from Glassnode. These are stablecoin aggregate supplies, and you can see Tether wins up. This is the green chart. They did have a bit of a dip back in summer 2022 when there was some nervousness around Tether, more FUD. But what has really happened is BUSD from Binance and USDC from Circle have really tanked off, and Tether wins the day. So watch that space. Let's talk about options for a second. And here, this is the big volume of Bitcoin options. You can see Deribit is a clear winner out there. They're stacking up a lot. There's about $32 billion in volume across Deribit, Delta Exchange, Binance, OKX. But this marks the second highest month ever, behind April 2021 by only about $150 to $200 million. So this shows you things are bullish. You guys remember April 2021? Yep, that's when things started going bonkers, and that's when we hit the first new all-time high. Now, the CME separately put up about 1.7 billion in volume. So all in all, this is very, very, very good. There's a lot of speculation happening as well. There's also a lot of speculation happening on the Ethereum option side. People are hedging their bets, locking in prices. But now the narrative is getting much more positive towards the Shapella release. People are no longer as afraid of the unlock of Ethereum dumping price. Now let's look at some Deribit option action. I'm going out to May 26th. I was going out to March a few months ago, and that was incredible. I'll zoom out for a second. Back in January, I was looking at the March action on Deribit for Bitcoins. You can check the videos back in January, Octa, and things were extremely bullish. I said, there's a ton of people betting on $30,000, $32,000 Bitcoin by March. And we got real close, hitting 29,000. So what these people, investors, do is normally very telling of where the future price is going. No guarantees, but they've been very good so far over the last year. Here, this is the Deribit option action for the 26th of May, 2023. And you can see big bets placed at 32,000, 36,000, 38,000, and out to 40 and 42,000, even a couple at 48,000 as well. So, but what's most important is if you look at the put call ratio of 0.26, that is massive. That is extremely bullish. Nobody's buying puts. Everybody's buying calls. So watch that space. We'll come back in a couple months and see how that did. Now we're going to drill into some daily active users across all the top layer 1s and layer 2s, because some interesting things have happened lately. And let me, first of all, this is from the Invest Answers engine. This is the smart contract platform, daily active users. Now, the daily active user action confirmed on the AI engine. Note, by the way, actually, if you look at the red line, the big spike, that's Arbitrum. Watch how that rose up and how it fell off. That's called the airdrop activity game, and it's over, where they entice people in to be active for the promise of free money, and it's not sustainable. Now, what's very interesting as well is the orange line. If you look at the top left with little orange triangles, that is Solana. Big shout out to DJ out there in the Southern Hemisphere for helping put these beautiful charts together. Thank you so much, buddy. But here, if you look at the orange spike lately, it just shot through Matic, which is the green squares, and Ethereum, which is the blue diamonds. Now, the most active daily active user chain is Solana. And it's been a while since we've been here. We haven't been here since first week in 2023, and again back in late 2023 Q4, etc. But that is impressive. All the other chains that are there, you can see them, they're all hovering around 40,000. And I don't know what that is. I'm looking at some chains and they're like 40,000 daily active users for a whole year. Another one is 55,000, 56,000, 55,000 for a whole year. They don't change. I don't know who these people are, but there's no activity. And if you look at the other chains, watch how violent the moves are up and down. You know, obviously Arbitrum is pumped. But anyway, the big takeaway from this, everybody, is there are three chains that seem to matter and seem to be adopted. And you know what they are. It's Matic, it's Ethereum, and it's Solana. That's the data. And they are the only three that I've ever talked about in great detail since I began this channel. So it's good to know we're consistent. Let's look at another view. This is from Artemis. Again, confirmation, daily active users, 444,600. Yesterday, Polygon, 371,000, Ethereum, 332,000, Cardano, 48,000, Avalanche, 36, etc. And that's a simpler view of how all this works. Now, this is confirmation of the big Solana spike, and a big shout out to Stephen Weston. Thank you so much from Sunday. I did tell you I'd be talking about Solana this week. But here you can see the spike in non-vote transactions, 7-day moving average from the block research. And this is now at that 30 million level, which is almost going back to August 2022 since we've been this high. And it is, of course, a 2023 high as well. So activity is coming back. As I say, black holes suck everybody in. Better user experience, lower fees, faster transaction times, more stuff on the shelf to do. And there's also some other new stuff coming as well out of Asia on this chain. And Solana as well just announced a conference, their conference instead of Lisbon last, I think it was this year or whatever. It's going to be in Amsterdam in the end of October, very early November. So who knows? A lot of good stuff happening in that time of the year. Now, again, big shout out to DJ for these wonderful graphics. This is another interesting one too. We're going to look at the total commits since inception, or at least since the inception of the data that we have, again, across smart contract platform activity. You can see the 800-pound gorilla is Ethereum. Heavy crypto today in today's video. Number 2 is Solana. And number 3 is Cosmos. Number 4 is Near Protocol. Number 5 is Matic. And then you can go down the line and see all the others. Now, a lot of people say, well, what are commits? Now, commits are basically when a developer does a commit in software development, it is the change made to code repository by a developer, typically tracked to a version control system like GitHub or Git, and it helps analyze work volume, team performance, identify trends. It also helps understand where the project is going, how much resource allocation there is to the project and development, and it is an essential metric for tracking progress and quality of a chain, and of course any software development. So that is impressive to see where the action is at, where the development is happening. But again, short term, just like the stock market, it doesn't reflect in price how much stuff is actually being built, but over time, it will. Let's talk about fear and greed real quick. You can see we are still greedy, which is good. Won't spend too much time on that. It's been very, very consistent. It means the market's still bullish, still coming on. So now we switch to, unfortunately, the bad news and then the ugly news. So let's jump in. This is the money flow from CoinShares. And unlike the point money flow, you can see, the reason I put this in the bad news is there was a very lackluster inflow of only $2.5 million, which I mean is like nothing, which I take as a negative. Therefore, I stuck it in the bad news category. And trading volumes as well in these investment products fell by 33% compared to the prior week. There was a lot of excitement the prior week with banking crisis and all sorts of uncertainty. In addition, this goes back to the developer chart we just showed before as well. This is blockchain developer activity in terms of weekly commits. And the question is, what's going on here? Is Chokepoint choking the devs? I don't think so. I think the number of developers in crypto has fallen radically from that 250,000 person high in early 2021 down to 50,000 today, because it is a symptom of the bear market, not a symptom of Chokepoint. But again, sometimes it's not necessarily how many you have, but how good they are. And hope the good ones are still there working away. But that is a radical change. And that is reflected in some of the chains that have literally dropped off the face of the earth when it comes to development activity. Next, let's look at the CZ wallet. I've been tracking this now for 4 weeks. And over the last 3 weeks, $900 million has left the BUSD holding. And you can see the way it dripped down, 970 million to 776 to 421 to 92 million left. What was also interesting too is they seem to have added about 33 million in DAI, another stablecoin. So it looks like they're pivoting between stablecoins a little bit. But where the rest of the money is gone, I'm not sure. I'm sure they nibbled on some good altcoins as well. Now, finally, the ugly piece of news. Hope you're liking this so far. Please hit the like if you are. I can tell very quickly if I'm still shadow banned. I seem to come out from it for a while. Now I'm back in. There's only 1,200 people watching. It was always 3,000 for the longest time. So please hit the likes or else it's not worth me working since... Let me see. I started working on this deck yesterday at 3 o'clock. Believe it or not. So a lot of work goes into this, but if there's so few watching it, it's not really worth it. Anyway, thank you all for being out there and being very, very loyal viewers too. So where was I? The ugly news. This is the interesting part. First of all, why do people own some of these cryptos? Big dumpage on the way. Again, top of the list here is 1inch, followed by Galaxy, and then Tornado Cash. But some of the numbers are quite substantial, how much they will be dumping over the coming hours. So keep an eye on that, everybody. Remember, that does have a big impact on price. You've got Moonbeam, Glimmer, ticker DYDX, Aptos, Euler, that had that bad hack the other week, Sweatcoin, BitDAO, ApeCoin, and Axie Infinity joining the charts, ready to dump on people about $33 million, which is stunning. But again, all of those NFT, metaverse things are all money grabs anyway. So just be careful out there. Watch this stuff. After tokens are released, price does go down. Let's talk about some interest. Now, this is the first exponential chart we'll look at today. And this is the name of the title, Default or Debase, the dollar. And what is more important than the absolute debt level in the short term and the interest expense on that? That is an up and to the right chart, everybody. And the key thing here is, if you imagine the US has a budget, imagine that budget is, say, $4 trillion to spend on stuff, people's retirements and social security and medical and military defense, infrastructure, etc. Well, by my estimates, currently, I think about 19% is spent now on interest. That'll be 25% soon. So either they have to cut other programs or explode the deficit. And of course, they're going to explode the deficit. That's part of the whole story here. QE to infinity. And this was kind of my whole thesis. How can they, increase rates when they have so much debt and they're just exploding deficits, which will ultimately reduce GDP, which is a silly thing to do. And as I mentioned many times before, the Fed do not control inflation. They can destroy demand, but they do not control inflation. Inflation right now is driven by things like the price of oil, which is driven by the Saudis, in cahoots with the Russians and the Chinese and all the dealings that they are making. That is the problem. So anyway, enough of that. Another chart, an exponential curve. This is projected federal debt held by the public. And a shout out to James Lavish and his great Substack for this chart. His Substack is called The Informationist. If anyone wants to sign up there. So everybody's writing these cool newsletters. And I subscribe to about 15 Substacks. That's where I get a lot of this information to share with you all. But this is the CBO report from a few weeks ago. And again, the budget authority of the US believes the federal debt held by the public will be this high as a percentage of GDP. So in the not too distant future, that's going to be 200%. And as I said many times, once you go beyond 66% debt to GDP, there's no coming back. You can't dig yourself out of that hole. It's like imagine you got $30,000 in credit card debt and they're charging you 19% and you're earning $20,000 a year. You can't escape. It's just gone. Anyway, final exponential chart. This is US government debt as a percentage of GDP and what it's done in 2022. And believe me, and this shows you yellow is local debt, orange is state debt, and blue is federal. Believe me, this is going a lot higher in 2023. because tax revenue will be zilch from 2022 because no capital gains were made because the market was so bad. And of course, everything else is down and interest is through the roof. Therefore, debt will be through the roof. Anyway, kind of sad to see. In addition, the bank crisis is not over. A lot of people are saying, oh, it's over now. It's a different type of crisis. But no, I do believe there are more shoes to drop. This from Jeff Vinegar, a very good follow on Twitter. And this is what he calls the bank walk continues. Bank deposits now down 4.1%. It doesn't sound dramatic, but this is your sibling, your neighbor, people with money sitting in a bank account, each at their own pace, deciding they're sick of earning 0% each day. Someone new moving the money out of 0% and into 4% money market accounts or treasury bills, whatever. And this is not exclusive to the US. This happens all over the world, everybody. Everywhere. Everything I show here is happening in your country too. Now, a quick reminder of what 0% looks like. These are three of the biggest banks in the United States. Wells Fargo, 0.15%. They're the most generous, actually, but it's still a pittance. Chase, 0.01%, and Bank of America, 0.01%. Remember, it's insane. They charge you 800 to thousands of times more for giving you money than they do for you giving them money. That is the funny game. That's why the world is looking to crypto. People need a better way around this. And there was a time in Europe not too long ago where they were taking 0.3%, 0.4%, half of a percent for you to hold their money, which is kind of ridiculous. Negative interest rates. It was like mind-blowing. I never thought in my life I'd ever see that. In addition, bank drainage has not stopped. The bottom panel here shows, despite the outflows that began in January, they've been accelerating. And these things not only happened before the first banks failed, people could sniff a problem. And to borrow a crypto term, the public is yield farming and the banks aren't offering anything to farm. So people with their deposits are going where the yields are more abundant. This bank run is not going to stop until, most important chart here, only when the deposit rates converge with the market rates will deposit outflows stop. See the TD graphic above and the too big to fail deposit rate graphic here. We have a long way to go. And this is what's impacting companies like Schwab and others as well. Anyway, sorry for these grief tidings. These are the things that are happening all over the world, and they're a big part of the problem today. But there's more. This is another piece of very ugly news, and it's kind of stunning when you think about these statistics. Over the last 50 years, you can see here, productivity has gone up. Since 1972, it's gone from 90.84 to 246. That is a 270% more productivity in that time frame, 50 years, which is a lot. But you'd think the workers would be paid 270% more? No. They're up only 115% from that 90.84. So basically, workers have become 270% more productive, but they're only paid 26% more. Of course, there's a lot of maybe robots and technology that are helping this, but people's salaries are not keeping up with what they're actually generating in returns. So anyway, this, with the environment we have, and we're seeing the changes in the structural labor force, is all reflected here too. People are not happy. And one of the predictions I made in late 2022 was there'll be a lot of riots and strikes and stuff happening in 2023. Well, Europe is already having those right now. Anyway, moving on. Let's talk about oil. This drives inflation. Now, OPEC cuts and the summer season should bring about at least $95 oil or even triple-digit oil. Again, as stockpile draws in the second half will be much steeper. Why the second half? Well, some of the driving season begins as well, and you can expect a big amount of drainage. So what OPEC did is they literally have the US over a barrel, despite many people say that US is energy dependent, but still this does hurt. And the US has to start buying oil to replace the strategic oil reserves, which are running very low right now. In addition, this is an interesting, cool thing that Sanjay shared with me, and I thought it was mind-blowing. So I talk about, the Fed breaking stuff here domestically, but think about this. This is Taiwan I think. Taiwan is one example here in this chart. Then you got Korea, Japan, etc. The problem is life insurance companies who manage people's pensions, and it shows their asset positions. And they hold the longest duration books of all industries and are very exposed to losses in bond markets. And while running them is very difficult, you can't run on your life insurance, it's stuck. A squeeze is likely because they've locked in very, very low yields over the last few years. But the funny thing is, the domestic markets don't have the liquidity for the type of life insurance and pension funds that these countries have. So where do they go? They go to the US. So you look at things like the term exposure that the American banks have. The insurance companies have it too, all over the world. This is Taiwan Life Insurance Company, how they got hammered. So imagine you are a life insurer in Asia and the domestic bond market is simply not large enough to absorb the insurance premia. And this adds a currency element to the mix of problems. Strong dollar, hedging losses, that term to maturity issue. It's, one of the many other shoes that are falling, like commercial real estate, etc., in other parts of the world. So with that today, sorry for going a little bit down the macro angle at the end, but we've got to understand what's coming, and H2 of 2023 could be bumpy. In the meantime, stock market's good, but it can only run so high for so long. So with that, everybody, thank you so much for being here. Crypto's pretty stagnant, but the alts are running. And thank you to the lovely 1,500 people watching me live. So it's gone up 300. Every single like is really appreciated. A lot of work goes into this. Thank you, everybody. Thanks to mods in chat, and I'll see you all tomorrow. Bye.